Talk to me about cost cuts. Okay, you're targeting what, 17 billion in costs in 2018.
Correct.
What comes after that?
Correct. Well, it's a bit of a tricky exercise, our conversation with this morning, because we have our Investor Day Thursday, so I'm in a bit of a close period.
Of course.
So that is something we will discuss. We will discuss then. I can only limit my comments to what we've discussed publicly. We did 1.9 billion of net savings in 16, 1 billion so far in 17, so 2.9 billion. We believe that that's very, very competitive in the industry compared to our peers. But fundamentally, my belief, and I can say this again, is that any organization should improve its productivity by 2 or 3% per annum. I've always said that the big restructuring was to reach a plateau from which we could evolve at that pace, because that's the pace at which the world economy is evolving. And if you're not doing that every year, you're falling behind. Fundamentally, when you have to do a big cost reduction program, it's because you have not kept pace with the industry and the economy by paring your costs by a few % per annum, which is more effective and less painful than having to do what we just did.
But in terms of, for example, so where do you see the growth coming from? I know you mentioned the wealth management. I know you've mentioned many times Asia. But again, if you talk about productivity, then you need kind of, a growth for revenue.
We are very positive about the world economy. We're very positive about the US, very positive about emerging markets, and within that China, and noticeably very positive about Europe, which is new. Because with the election of Mr. Macron and the turn of things in France, you have a Franco-German engine there that can power the European economy forward. So the key thing in this comment is the synchronicity of all this. For once, we have the 3 major economic zones doing well at the same time. If you look at what are we focused on? We think CAPEX, capital expenditures, is back and very strongly. That's a major shift in the world economy. And it can create a scenario where you can have both high growth with low inflation, because productivity gain, back to our topic, fills the gap. Okay? So if you invest in capital and productivity grows, you can get into a very healthy growth scenario. We also, after CAPEX, the other big theme I was concerned about was QE. And Quexit, if I want to use a term, exit of QE, I think that's being well managed.
Because it's slow.
It's slow, it's gradual, and the communication around it is very good to drive market expectations so that we don't have an accident. When asset prices and asset valuations are as high as they are, it's important to almost take the investor by the hand and not surprise him or her.